been listening to a few people teaching how to set up a fund of funds. What does that mean? So they say to you, these people that probably can't raise money, they say, listen, you set up a fund and you raise money to invest in my fund. So you learn how to raise money, and then later you can raise money for your own deals. Beware of those who give you a delay in life, that give you an extra step that benefits them to get to your goal. Beware of those who derail you. Beware of those who actually insist on you following their advice. I tell you always, this is my opinion. You judge for yourself. What's true for me may not be true for you, but I give you the principles that will work. And I try to give you principles that will work in any market at any time, because I've been there, done that, and I've seen what my students, my investors, my connections, the people I worked for, people I worked with, and what I have experienced. And I've gone through a lot of things that give me the wisdom to decide today. And one little decision, just a few days ago, I made a decision, instead of selling the whole building, to separate the upstairs and sell it for the balance of the debt. The building downstairs makes about $20,000 a month. Upstairs could be a hotel, and it's just too much work. The city keeps changing rules and delays, and I owe only $2 million against it. But my income from downstairs is going all payments for the $2 million sum. And I said, you know what? If I put upstairs for sale at just $2 million, it's gonna sell like this. So I will go from making zero. Whatever I make payments to the bank. Whatever I make payments to the bank. So I'm gonna separate upstairs, sell it for $2,177,000. I think that's the exact balances of yesterday. So I'm gonna sell the upstairs. I'm gonna go from a break even on this building that has been going on for 4 years, hoping to develop it, to immediately making $20,000 a month. One right decision will make me $250,000 more per year. Now, so how do you make the right decisions? You constantly look at things. You keep looking at things. Like here, all day long, I'm looking at my numbers. This one, how much would it sell for? Look, I print it and I look, okay, these are debts, these are incomes, these are things. And I'm looking. All my desk here is full of notes with different colors, with different printouts of this and how much the bank loaned me, how much they assessed it. It is endless. Anything in front of me, even what's posted on the walls in front of me, okay? Numbers. So I have the numbers speak for themselves. And the more I look, the more clearer it gets. You fill the voids of knowledge with accurate observations and very good calculations. So if you can't observe and you can't calculate, what are you doing in any business anyway? So my point here is, you don't want to raise money for others and be stuck with a structure that doesn't allow you to raise money for yourself. So what do we do to help you? When I set you up with a fund, the reason I got into the fund business where I give you a turnkey structure, I help you understand what you're trying to do. Great, if you're already doing it, wonderful. Let's take you to the next level. Let's give you the best structure, because the money's in the structure, not the strategy. Everybody has a strategy to make money, but do they have the structure? Give you the right structure, which I prefer debt funds. And a fund, not a syndication. Syndication is one asset. A fund, you can put different kind of assets, a residential home, wholesaling, tax liens, tax deeds, lending, assisted living, or whatever you want, okay? And you can set up your fund as fund of funds and as a fund that can do joint ventures. So when you raise money, you're able to find your own deals. And you find a deal you can do by yourself, you can do a joint venture through your fund. And if you have more money than you have deals, because some people are better at raising money than deploying it, you partner with somebody else. As a matter of fact, yesterday, I was finishing a training and the lady said to me, I have a lot of contacts, but I used to be, just all I have is 3 residential homes and all this. So I set up this because you said one thing, Sharif. You said that you have so many people that set up and you can put us in touch. She said, I can raise $1 million right away as soon as we roll out. Can you put me in touch with some of your other students, investors that set up their own funds? I said, absolutely. You tell me what you want to do, I'll put you in touch with 4 that come to mind. One of them is on the call right now, Anthony Lawson himself. Hi, Anthony. So I have Anthony, I have Fernando, I don't know if he's on the call, he does lending in Florida. You know, I have some other group that are doing Airbnbs in the Northeast Virginia area, and they're growing, bought a building and are converted. So what happens is you can set up a structure to raise the capital for yourself, or to do joint ventures, or to do your business with others as joint venture, or you become the fund of funds so others can give you money. You don't set up just a fund of fund where you actually raise money to give it to somebody else, hoping that you get good at it and then later you raise for yourself. That's a delay. And if you go to an attorney who tells you, oh, don't set up a fund, set up a syndication first, why are they doing that? Because what's in it for them? They want to charge you 20 to 30 to 40,000 first, and then maybe a discount to 20, and then a discount to 50. They keep getting you in. We set you up once. We have a special, we've been running it for 2 years because it's been so successful. 25,000, I do all the training, the setup, the turnkey, the whole thing with an attorney that understands litigation and roll you out in no time. So you're on the right track, but do it for yourself. Don't raise money for others unless you're gonna do joint venture partnerships, not just get a little fee or something. Okay.